The Bitcoin Group, the American original. For over the last 10 seconds, the sharpest Satoshis, the best Bitcoins, the hardest cryptocurrency talk. We'd like to welcome our panelists. Tone Vase from Liberty Life Trail.
Good evening, everyone. And as you can tell, I have finally listened to Thomas. I was not going to wait 8 years for enough donations to come in. And I decided to spend some money on the Blue Yeti. Not yet heard myself on, but everyone is telling me that it's making a huge difference. And as a story, I bought it like 2 days later. I had realized that I was in such a rush to buy it on like Black Friday because it was on sale that I totally forgot to choose my color because something this shape and this big on my desk, I should have just might as well made it black. But I guess I have the stock color of white.
Wow. It's a very classy silver. And I'm Thomas Hunt from the World Crypto Network. Moving on to issue 1. Issue 1. Bitcoin Powerhouse pulls the plug on Bitcoin. Circle is saying that they're deciding to focus more on their mobile payments business and are removing the ability for Bitcoin buyers and sellers. This, of course, led Wired magazine to write another Bitcoin obituary. The future of Bitcoin is not as a digital currency. Tone Vase, is it over? With the rejection of Circle and the IRS attacking Coinbase, is Bitcoin over?
Oh man, so Circle. Oh, great. Now I remembered what I forgot to freaking open. Oh, maybe I still will. Anyway, so I have my screen share on, and I found this article particularly well, not funny, but kind of funny. Just look at the title. The future of Bitcoin is not as a digital currency, which seems to just slightly contradict the title of Satoshi's white paper, which clearly states Bitcoin, a peer-to-peer electronic cash system, and pretty much currency. So I find it so hilarious how people have already turned blockchain into whatever they want it to be, and they're now calling Bitcoin whatever they want it to be. As you read this article, I don't understand. I have it's not like revisionist history. In a minute, Jeremy Allaire, I always had a bad vibe from Jeremy Allaire. I never understood what the hell Circle was doing. It basically explains how they're not going to use Circle for the people, and they're going to use it in their background of settlement, which makes no freaking sense. The article also goes on how Circle is moving all their people to Coinbase, and then Coinbase is also trying to get out of this whole Bitcoin, people buying and selling Bitcoin, right? So what the hell are they doing? What do they think Bitcoin is? They're like, oh, we're going to use it as a settlement system. But no one is securing it. It's decentralized. It's by miners. You don't have control of it. Absolutely no sense to move company to company between trusted points through Bitcoin. It's just complete nonsense. Now, let me go back to the beginning, right? So this is my blog. Totally forgot about this, right? So I started this blog all the way to the end. Okay, so the first time I ever posted on my blog was in March of 2014. This is before anyone knew my name, like nobody. This is before I attended my first Bitcoin conference. And the very first article I wrote was about the IRS, which we're not going to get to. I totally forgot about these. Like you forget the first articles you ever write online. So it's not March, so it must have been in April. It's ironic how the first article, so when I tell people I've been talking about the IRS issue forever, I literally have been talking about the IRS issue forever because it was the first thing that made me create a blog and write something. This is back when I didn't expect my blog to be only about Bitcoin. This is also back when I had a life. Okay, so it wasn't March, so it must have been May. Hold on. I was writing about current events. Here we go, May. And there is an article here from May 4th of 2014. Is a compromise on Bitcoin regulation possible? And in here, I talk about Jeremy Allaire, and I will attempt to read on air, which is probably not ideal. I'm talking about, so Jeremy Allaire gave a keynote at this conference, and it's funny, that article talked about how Jeremy Allaire introduced his company at a Bitcoin conference, and it's possible this was the conference. Remember, this was almost 3 years ago, but this conference was in April of 2014. So unless there was another conference just a few months earlier, because he did introduce Circle in early 2014, so this might have been it. So here's what I wrote. I was a noob. I was a noob to Bitcoin. So I barely understood what Bitcoin was. I barely understood what the blockchain was. But here's what I understood about Jeremy Allaire, the first conference I've attended. Okay, so here we go. I'm just going to read from my own blog. I've heard of his company for over a year now, yet no matter whom I ask or look around the web, it's still completely unclear what his company will do. And I'm talking about Circle. The description says, make it easy to exchange, store, send, and receive Bitcoin. But considering the fact that these things are pretty easy to do right now, this could not be any more vague. And then I have one more paragraph. His speech did not go over well with the Bitcoin community, as can be seen here, and I link to a Coinbase article about his speech. I hope the link still works. Due to statements like, and now I'm quoting Jeremy Allaire, critical components to ultimate mainstream acceptance is the ability to assign identities to transactions. And then he follows this with, while still maintaining financial privacy and even anonymity. That makes absolutely no sense. Like from day one, Jeremy Allaire wanted to assign identities to transactions. He had no interest in Bitcoin at any point. Then I wrote a couple of other things, and but what no other article pointed out, and I looked at a lot of articles after his speech, because I clearly heard him say at that event that he wanted some kind of Federal Reserve and government and Wall Street to have a say in Bitcoin's direction and coding, which I thought was completely insane, and no other media outlet picked it up. And this is why I thought it was important to write about this on my blog, again, as one of my first 7 things I ever wrote. So this was my first.
Remember, they're also blaming Bitcoin in these new Circle articles. They're saying that Bitcoin is partially at fault for the reason they got rid of them, that the scaling wasn't going well and these various things. It's another case of these companies kicking Bitcoin on the way out. They use Bitcoin to get their acceleration and their popularity, and then on the way out, they're like, Bitcoin is terrible. I forgot the other one was BitReserve. BitReserve, they changed their name, Uphold. And the Uphold CEO came out and said how horrible Bitcoin was, even though, again, it was the thing that launched them. Sorry, Tom, go ahead.
But like my article from 2.5 years ago proves that that's not true, right? I mean, he clearly quoted, Bitcoin needs the ability to assign identities to transactions, right? So he's mad that Bitcoin didn't do what he wanted it to do, but it was something it wasn't actually designed to do. Like, I don't understand. So I had a sarcastic tweet the other day saying that all those people that, you know, the use of the word blockchain to get funding, Jeremy Allaire used the word Bitcoin to get funding, and now his companies will have nothing to do with Bitcoin. I know they're still saying that they're going to use it privately as a settlement. I think that's ridiculous. I'm going to call bullshit on that one. And when they stop doing it, no one is going to report on it, because going forward, there's absolutely no reason for Circle to be discussed in the crypto space. So when they finally realize that Bitcoin is not for them, they'll stop using it as a settlement system. Circle is also completely closed. So unless you get a disgruntled employee leaving Circle, you're not going to know whether they are or aren't using it in the background. I mean, they could still be saying it publicly to kind of save face, so that people like me aren't like immediately connecting the dots, saying they are not using any of that investor money for what they planned on doing. Now, that doesn't mean that they can't be a successful company. Now, Goldman Sachs invested in them, and I guess Goldman Sachs will look to get their investment back to make this a profitable company. But I don't think it has anything to do with Bitcoin, and Bitcoin was probably the main reason they got that funding. I remember those headlines. They were off the charts.
And it's not just Bitcoin. I mean, remember, they were one of the first companies not to use Bitcoin in their marketing, like Abra, like Circle, and then BitReserve. But it's more than that. They also said that they're developing an open source system that seemed like it was exactly like Bitcoin. They called it Spark. They said they were going to use that to send transactions around. I hate to say, but this is echoes of ChangeTip, where ChangeTip had some kind of centralized ledger that they were keeping all their transactions in, and then when you wanted to cash out, they would send you the Bitcoin. Once again, they're replicating a system for sending around value. When you create another layer with KYC and these other features that some Bitcoiners don't want, people are going to naturally say, why can't I just use the actual Bitcoin? I think the comparison here is AOL and the internet. You could get AOL and you could get to a web browser and you could get to the real internet, but there's this whole layer of services with the AOL on top of that. And eventually people abandoned that and they started connecting to the internet directly. Likely they'll end up using Bitcoin directly, and all of these services will cease to exist.
I kind of have to agree with you. I mean, these Bitcoin wasn't meant for these services, and they will go away or they'll stop using Bitcoin. I mean, they're going to go to the permissioned ledgers / DLT space, which I guess is a segue into the next topic.
And also we have this great tweet that I wanted to share. We were going to talk about it on the earlier show, but I want to bring it up now. Alpaca SW says here, he says that Amir Taki had a great sense of character. And he quotes this paragraph from 2014. I'm just going to read parts of it to you here. He's talking about Jeremy Allaire, the CEO of Circle. Amir says, people like Jeremy Allaire are scary because they are boring and dull people lacking in any imagination. They do not understand Bitcoin beyond the simple level and are excited because they've spent years in the corporation brainwashing world, and now they see these new tools of power. It's important to understand the logic because it's the logic of many noobs to Bitcoin familiar. Many noobs to Bitcoin, unfamiliar with the world of consumerism and unversed in the ways of open source and decentralization. And I think Amir has a lot of wisdom in this, that he's really talking ahead of time here, and he's saying these people don't believe in Bitcoin. They haven't thought it out. They don't see the problems that Bitcoin solves. And when they come in with these questionable companies and we say, okay, you've raised 5 million. Okay, you've raised 30 million. You're amazing. It's great. But the things you're building have already been built. We could already just use Bitcoin for these things. We don't need another layer on top of Bitcoin. We can use the Bitcoin. I mean, there's the Lightning Network. That's a different thing, but that's open source, not really a company in the same way that these are companies. But it just seems like they need to stop replicating things and use the actual Bitcoin. But you want to move on to the next topic, Tone?
Yeah, no, I mean, I honestly, like, I'm searching through my blog because it sounds like exactly the same thing I said about Jeremy Allaire. And I was a noob. Like, Amir Taki was already the veteran in the space, I guess. And use that word, Bitcoin was only around like 3 years. But yeah, I'm sure there's an article where I was basically very critical of Jeremy Allaire for the entire 2014, and then he kind of went away in 2015 until coming back more recently. So as I'm scrolling through my blog, look, again, 2014, and look at, I'm not even going to click on this article. Rich versus famous in the world of Bitcoin. Be careful, the IRS will want their cut. I mean, I can't even, I don't even remember how, like, the majority of my criticism when I started in the space was all about the IRS. This was my, like March all the way through June of 2014. Wow, I wish I remembered this when we were doing all those IRS versus Coinbase discussions. Like, I totally had completely forgotten that I literally used to just straight up write articles. I mean, no one knew who I was. I didn't even think I had a Twitter account back then at all. But I thought this was the most important issue in Bitcoin. And now everyone seems to care. Well, I should have cared back then.
It really does seem that since they misclassified it as property, we've had all these complex issues where it should have been a currency. It should have been a currency from the internet, which is like another country. And we just should have accepted it in that way. And I think eventually we will. But we have this whole confusing period now where you have to pay taxes every time you move your money, according to Coinbase. And we'll have to see how that goes. Well, let's move on to issue 2. Issue 2, distributed ledger tech is back. The U.S. Federal Reserve launched their first research paper from the previous papers had been from the Federal Reserve of Boston and Chicago, but this one, from the official one, says that distributed ledger tech is interesting. And once again, the paper talks as though Bitcoin doesn't exist. They're talking about how this technology could be implemented, denying the fact that it is already running, like an airplane that's being fixed while it's flying. The Bank of Japan is also interested in distributed ledger tech, and Deloitte has bought their first blockchain startup, a company called SETL, Settle. And Settle, again, does things that Bitcoin could do. They make settlements on the network, which is what Bitcoin could do. Tone, what do you think about all this exciting new distributed ledger technology?
All right, well, reading the paper, the Fed paper, like, me reading long papers is really not a good combination. My reading attention span is probably about 3 pages. And after that, I either get very quickly bored or I'm a slow reader. My reading comprehension is really, really good. But my actual reading speed and to stay enthusiastic about what I'm reading are very, very, very small, which is why I probably read maybe throughout my life. That includes high school and college. I managed to fully avoid that stuff. Just never been my strong suit. So I was reading this, and seems to me like the Fed is actually starting to figure this shit out, which is, I guess, good. Because unlike CoinDesk, they seem to understand the difference between blockchain and distributed ledger technology. Now, I think they're just starting to understand this difference. And hopefully they will see blockchain as something like Bitcoin that requires proof of work, and they will see distributed ledger technology as something like a database that has absolutely nothing to do with rules and regulations that are needed on the technology part. They're just needed on the institutions that are using this distributed ledger technology, because nothing about it is, everything about it is just controlled by the admins. It's literally databases. So that I really liked. So first of all, my favorite thing that I read is, I hope my screen share is big enough and people can see it. I just tweeted this out right before the show. It was funny how literally calls the DAO a venture capital fund. That is something that I made fun of the moment CoinDesk, where the CEO of the DAO, Jensich, or whatever his name is, along with Steven Tual, are trying to explain to the world how the DAO is not a venture capitalist fund. And I tweeted this out following sarcastic remarks, because that's kind of what I do, where I said, just because it walks like a duck, quacks like a duck, and looks like a duck, call it a duck, it's all good. That's kind of what the DAO creators told us back then. And I tweeted this out a month before the Dow imploded. And it's nice to see that the Federal Reserve also sees this as a duck creators of the Dow thought it was. So also made a joke, Ethereum sold a token a year before it was created and made millions. This must be a new business model. And we'll get to this in our later story because this now is a business model. And the Dow also took this business model thinking that there was no risk and they were going to get all these funds. And this is why there are videos of me, 21st or thereabout, plus or minus a day, saying that all the Ethereum in the Dow is going to be lost. Anyway, so that's one takeaway that I have. My other takeaway is I've been spending a lot of times at these decentralized ledger technologies conferences, and there was one, hopefully they'll do more, that they're focusing on the technology sector, they're focusing on Wall Street, and they're looking to like inform people of what this stuff is. And I basically spend the entire day, I should probably zoom in. And I literally spent the entire day questioning every speaker, trying to separate a blockchain from a spreadsheet, right? And this was a quote that I had in the Bitcoinist. That one was at the top of Reddit, caused some controversy. But see, some people like me believe that a blockchain is something new, which is the proof of work consensus algorithm that Satoshi put into motion that gave us Bitcoin. Aren't sure. All right, why can't I find my mouse? Okay, here we go. For those that aren't sure, here's the Satoshi definition of what a blockchain is. And literally, you need proof of work to identify a block with the transactions, and then you chain these blocks together by proof of work. Is basically people creating Google spreadsheets, putting it on a cloud, making it shareable. Is the same, and they're calling this thing a blockchain. And I'm getting really frustrated with CoinDesk and their writers this out. So this means that I got to do it for them. Really took the feature list settled thing that Deloitte is now invested in, and it's literally a feature list: secure messaging, payments, identities, but it's all on a central database. I don't understand what is making this a blockchain. And then I'm looking at this team, people I've never heard of before in my life. I don't understand how they can possibly call themselves blockchain experts. There's like people, and almost all of them work at Blockstream or contribute to Bitcoin core development as just, because they like this technology of a permissionless value transfer. It's getting really out of control. Like I might be one of the few people that's holding out on that this word blockchain should actually mean something new technologically, not 1990s technology that got your email to you nice and sorted to the second. Google can give you your email to the millisecond if you want, nice and sorted, nice and ordered. There's no need for blocks. There's a whole record of when things got edited, who updated them. I mean, I've worked with databases my entire Wall Street career, and things really changed when we got a new CTO who was a database guy. He took away everybody's admin permissions to the database. He made all of the database developers create stored procedures for everything. So even if the goddamn mailman wanted to put something into the database, he had to do it through a stored procedure that had an LUBLUD field, who updated it, what millisecond it was updated, and the entire history of transactions. I mean, if you don't understand, and I'm not even a database developer, all I know is how to write select statements in Oracle and MySQL and SQL cases that we had. And each one of them had a stored procedure most of them had a front end, but a stored procedure is used on the back of the front end. Everything has triggers. Everything has fail safes. Everything gets backed up once internally within the building, a second time halfway through Midtown at the Google building, who has some of the most secure data center servers there is in Manhattan. Data recovery, I believe it was in California, over by you, Thomas. I'm not sure why anybody would put a data recovery in California, considering a little earthquake prone over there historically, but also in the same country. I would have preferred, data recovery to be, I don't know, maybe in somewhere else. But anyway, all this stuff was backed up, and everyone knew what the change was. This is not rocket science here. Is the revolutionary part? Well, that's the mining system. And I don't want to dwell too much more on that, but that's pretty much it. So basically, when I hear these presentations, especially IBM, like IBM's presentations have been really frustrating me. Like there was a guy, IBM guy speaking, and at one point he's saying, well, and then we put this transaction through the blockchain. And I just stopped him. I'm like, okay, wait, stop. The blockchain. You're talking about the blockchain. What is the blockchain? I mean, these guys can't answer the question. I'm like, at least say a blockchain. I'll still pick on you, but not nearly to the same degree. There's only one, the blockchain, and even that is, maybe, hopefully it'll keep surviving, and that's Bitcoin. If you're going to talk about a blockchain, okay, then I'm going to ask you, so what blockchain are you using over there at IBM? Look, I mean, I understand that the word blockchain is totally diluted, and I might be ranting here for no reason whatsoever, and we should give up that word, but maybe I'm not ready to give up that word yet. I don't know. What do you think, Thomas?
Well, I do agree with you. I think it should mean something. The thing they keep selling us is basically that the businesses can't be trusted to not edit their own data, and that this new idea is going to take our medical records and make them non-editable and put them on 7 different computers. But if those 7 computers are all controlled by the corporation, who's to say that they couldn't edit them simultaneously at the same time? It's not impossible. What makes the Bitcoin blockchain impossible is all these different many hands that are monitoring it, and that they're not all from one source. They're not all from one corporation. They're all doing the complex math. They're taking the time to generate those tokens, and that the tokens have value, that they're paid in Bitcoin for upkeeping the network. If you look at all of these other blockchains, the health blockchain, the dental records blockchain, all of these things, who's going to upkeep them without a token? Saying that there is no token, there's no need for a token, but the Bitcoin system is a complicated interlocking system where having a token helps you protect the network, and protecting the network allows you to have a token, and then the token can be valuable and it can be sent around. And this it's a system designed for solving a specific problem, and they're trying to use it as a hammer to solve every problem now.
But even using that, the only reason why even that system works is because the token itself is the value, not the system. Right? Ethereum is showing us what happens when half of your believers believe in the token, and the other half of the believers believe in the system that uses the token as gas to do something other than value transfer of that token, right? I think this will be the biggest downfall of Ethereum, even though there's numerous ones. But there's no consistent answer on what the Ether token is, because the Ether token is trying to be 2 things at once. And I think if you allow your token to be multiple things at once, you completely break apart the development, because who the hell are you programming this system for? If Circle wants to use the Bitcoin blockchain or settlement of other value, no sense to me, because then what is giving the token itself a value that makes the system valuable? Token itself, that's what will give it stability. I mean, I know this might be a little hard to comprehend, for some people. You can't have it both ways. You can't have everything at once. Something will dominate the other. Starts to dominate, where the hell is the security of your platform coming from?
And this was definitely the problem with Ethereum, is they're split between the speculators and the contracts. The speculators just want the value to go up. They don't care about the contracts. The speculators are the ones who said, oh no, we lost all this money in the DAO. We should roll back the contract systems to get our money back, which the contract people said, no, we can never roll back contracts. Code is law. We're trying to establish a new thing here. And they got split between those, and they can't serve both masters. They can't serve the speculators. They can't serve the contract people. Now there's two different types of Ethereum. Who knows if either of them are going anywhere? But I agree with you, Tony. You have to choose what your ultimate focus is. You have to have one singular aim.
I agree with you, but here's what something the Ethereum people may not realize is that the reason why now that we're what, about 4 or 5 months since that split, something like that, the Ethereum Classic is kind of like, but it's significantly less important for the Ethereum chain, even though when Ethereum chain was tanking 2-3 days ago, they were coming way closer to parity. Now Ethereum bounced up a little bit. Now, the speculators won. No freaking smart contracts using the Ethereum that matter. If there actually were smart contracts using the Ethereum for smart contracts and not the Ethereum for speculation in the price, maybe the other side would have won this battle, right? The only reason why the speculators won was because that was the bigger use case at the time. But Ethereum is planning on, they're still hell-bent believing in this fiction that Ethereum's primary use case will be smart contracts. And I don't think that will ever happen. And if it is, they get totally screwed on the other side from the speculators. So who are they programming for? They have just proved to us that they're programming for the speculators. And when is this power shift going to switch back to the contract holders? And don't forget, once Ethereum goes proof of stake, I think this becomes even worse, because now your incentive is to hold the Ethereum to make more Ethereum.
I think the real answer all along is that the Ethereum programmers have been programming for themselves. The most effective and efficient use of this system has been to make the early adopters and the founders millionaires. And I've always questioned the need for this to be a speculative and a separate token. From my thinking, you should be able to go to the Ethereum website, buy the tokens at $10 a piece, $5 a piece, whatever they want to set the price at. You use the tokens to run smart contracts, and that's it. It doesn't have to be this price thing, which you have a price determination and all this complexity, unless it's about the speculation, which we see time and time again. But let's move on to.
I agree with you. We got. Oh, sorry. One last comment. Then we move on. I know we're way off topic on Ethereum, but. Right, exactly. Because why in the world would you use it as gas and destroy this token of value? Meanwhile, you want people to invest in mining on your chain, but then you don't want to waste all this electricity for security, so you're going to go proof of stake, and then you're just going to give it to people just so that they can sell it to someone else who can then destroy it. I mean, look, the smart way to do this would have been to just create. It doesn't even have to be fully decentralized. It just has to be encrypted, and people need to trust that you're not spying on them, and that code doesn't care about who you are, and that will execute. And then you charge them a fee, proper execution of these contracts, and then the developers of the platform get to keep this fee to stay employed and keep this platform trusted. It's kind of like the miner fee, only it goes to the people keeping trust in this platform. And if they lose this trust by the people using them for their smart contracts, there's plenty of competitors waiting in the wings to do it right. But anyway, now we're getting way off topic, so let's move on.
All right, I think we're going to go a little out of order here because we were just talking about Ethereum and tokens. So we're going to move on to issue 3, Hackers steal over $300,000 from one of blockchain's biggest VCs. And as we were saying, Tone, what do you do with Ethereum? Well, one of the rep tokens are to be on the new Augur system, which is rep tokens will allow you to become an oracle, a decentralized oracle. So if the 49ers win and we all agree, then we all get paid in rep, and rep holders help determine the result of the contest. But what happened was the hacker got into his account. It looks like they used a backdoor through his cell phone. That's happening more and more lately. You just call up T-Mobile or whatever company it is, pretend you're the person, and hack right in. What was interesting about this attack is that they took so much rep or rep tokens off of him that when the hacker sold them, they crashed the rep market, leading people again to call for a rollback or a change in the system. What do you think, Tone, about the hackers stealing from the blockchain VC?
Okay, so I'm going to take the story into a couple of directions. So obviously, I mean, I haven't really been paying attention to this much. Obviously, they didn't roll back the chain, correct?
No, they did not roll back the chain, but it was discussed.
And for some reason, the price of rep is now higher than it was pre-hack?
It did recover, and it is a little bit higher than it was before. I'm not sure why.
That's ridiculous, but okay. I don't. I mean, again, right? A VC holding this much rep bothers me a lot. It's just seems like a lot of insider shenanigans going on. But again, just opinions, no, just randomized speculation. All right. So there's several things in the story that that just don't make all that much sense to me, right? But by the way, this is why I don't use my phone as two-factor authentication. I don't even like two-factor authentication. I've heard other insane stories how their numbers changed to someone else's number because they got into their emails, and then they call up the phone company, they get their phone number forwarded to somebody else, and now they have access to their two-factor authentication through their phone. So I would not have that problem by not having two-factor. I have other problems, but I don't have that problem. We can talk about my
you should get real two-factor. You should have it on your phone, not phone two-factor.
Okay, so Joey King, here it is. Yeah, Joey Krug. Sorry, Joey Krug. Okay, so this is one thing that was weird, and I'm sharing my screen here. We've been sending emails out with instructions. If you don't sell rep on an exchange and store in cold storage, it's fine. But if you store on an exchange, they can engineer your phone number. That's correct. So here's the thing, right? Why did they go for the rep? Weren't there other things on the exchange they could have sold? So this tells me two things. This tells me this particular VC either was literally all into rep and they didn't hack any of his other stuff because he either didn't have any other stuff. There's something a little deeper going on with the rep, right? So I don't know. So that was one thing that was questionable. Here's the other thing, right? Also a quote. In the past month, there have been at least 10 cases of people publicly involved in a cryptocurrency seen being victimized by phone hijacking. A little specific. Sorry, hold on a second. Let me just glance through this article. Oh, yeah, here. Yeah, Augur core developer Joey Krug acknowledged that he has been in contact with the group before hackers had asked $50,000 ransom that was not paid. Krug further noted that digital bearer assets, there's not much technically. So here's the thing. I mean, like, look, these statements, they could be nothing, but they make absolutely no sense to me. Why would he be in touch with the hacker and the hacker demanding a $60,000 ransom? To me, I'm using like my little spidey sense here. It sounds like the hacker found some kind of exploit in the rep token itself, because otherwise the statement makes absolutely no all, right? And Joey chose not to pay this ransom, and then one of the major holders of rep got hacked. And it's just like, look, I could be totally wrong here, and it could be a random hack through an exchange. But putting those two sentences in combination makes it sound like the exploit is within the rep and not within the exchange.
I'm not so sure about that.
Maybe I'm just overthinking this here.
I mean, I could see this as they've already hacked the VC's account. They know how much Augur rep they have, and they know that they can crash the market. And their essential threat here is, we have so much rep, we'll crash the market. Pay us not to crash the market. That's my reading of this. But
so does this mean that the VC got hacked like weeks ago, and then there was a discussion between Joey and the hackers while the VC was basically sitting there waiting for a resolution?
It's possible that they hacked the VC and then didn't do anything. So they're just sitting there and they have access to his accounts, and then they're waiting and they're like, how can we maximize this money? Well, if we go to the developers and we say, hey, we'll crash your coin. I mean, it did crash the Augur market. You can look at the
I know, but look, when you hack someone's account and you have access to money, like that kind of money, you don't just sit there and wait for the guy to sell the coin one day himself, right? Or like move it out into cold storage. You don't do that, right? Like the moment you hack someone's account and you have access to that money, the sooner you move it, the better the chance you have. So that just doesn't make logical sense to me, that they would be sitting on this information while negotiating, unless they had fully locked them out. And it would be kind of tricky to lock someone out for weeks. By the way, a similar story happened to, what's his name? Joby Weeks of BitClub. And there's a whole video about it with Sasha Daygame, which is interesting because Joey Weeks got hacked for about 100 Bitcoin because they literally hacked his email, and then they and had his phone number changed. Like this is how I know this story, so that the hacker now had changed Joby Weeks' phone number to be able to do 2FA. Was able to take all of his coins from the exchange and literally like move them out and sell all of his old coins. I think the total that he lost was about 100 Bitcoin. But then after that, because he now had access to his phone basically and his email address, he then hacked his Facebook and started PMing, private messaging his friends, basically saying, "Hey, listen, I need like 20 Bitcoins right now. I'll pay it to you tomorrow with like 50% interest. I got to do something real quick." And right after he was sending these messages, he was immediately deleting them, so that even like Joby Weeks, they had no idea this was happening. And then Sasha was one of the guys that just said, "Hey, Joey's a good friend of mine. I know he's good for it." So he like immediately like sent him. He's like, "I didn't have 20, I only had 12, so I just sent it to him." And then the next day, I message Joey and say, or 20 Bitcoin, show me. And Joey goes, "What are you talking about?" And that's how Joey found out that Joby Weeks found out that he got hacked. The hacker got his friends to like trust him and send him more Bitcoin. Yeah, this stuff gets insane. But just like reading this article, it's just so weird. I don't know. To me, it's just weird. Like things aren't like, the dots are not connecting for me. I don't know what the real story is, but they're not connecting for me. But Augur is like a useless project. Well, I don't think we have time to get into it. Why a rep token is totally unnecessary and is only there to make people and I guess VCs rich. So there you go.
That is a good point, Tone, about Joby Weeks and the email and the hacking. And I remember the famous story from BitPay that a hacker hacked the CEO of BitPay's account, sent a message to someone else, said, hey, move a bunch of Bitcoin to this address. They did it. The hacker tried it again. They did it again. The hacker did it again. I mean, you got to have business practices. And I don't know how you pre-warn your friends, but maybe you just tell them, you're like, I'll never ask you for a bunch of Bitcoin over email. I'll call you on the phone. I don't know, you have to have some kind of a handshake now, and you have to have this, some kind of code, because
I know
eventually.
That is absolutely true. And you know what? And if you ask all these people building decentralized ledger technology, they will tell you that there's a blockchain solution for this, right? I mean, the R3 will tell you that we have the solution for this, right, with our decentralized ledger non-blockchain, right? Because again, right, it's all about everything. At the end, it's all about trust.
And I think this segues well into our next story, which is going to be issue 4. And it's pretty much along the same line. Issue 4, A16Z USV invest $10 million in blockchain token trading firm. And essentially, these would be the people buying rep tokens. These would be the people presumably buying Ethereum and other Ethereum-based tokens. The plan here is the new company, Polychain Capital, intends to invest in so-called protocol tokens. So essentially, this is a massive altcoin trading fund. Tone, do you think this is a good idea?
You know what? When I started reading this story, I had to double check the date to make sure it's not April Fool's Day. This is the type of story I expected earlier this year on April Fool's Day. I still can't believe it. Like, I read this thing twice. I don't understand, what is Andreessen Horowitz thinking, and what is Union Square Ventures thinking? I have absolutely no idea.
What's so funny is when I read this, I misread it, and I assumed that they, like everyone else, were actually going to be making the tokens. And I kind of understood that as an investment. I'm interested myself in making tokens. I think that has a lot of interest. But this is actually buying, presumably holding, trading, and selling the tokens, which, as we've seen with the price of Augur, as we've seen with the price of Ethereum, it goes up and then it goes down. I don't know about the long term of any of these.
That's not how I read it. I read it in between the two ways that you understood it. I understood it as they would be funding companies focused on creating these tokens, and they would get those tokens as rewards for funding those companies. But again, we're both speculating here.
It's like the stock market thing again, where the companies get early access, and then by the time it gets to the general market, all the profit's gone. So they've managed to create the same system again with the ICOs.
Right, but correct. And basically they took the IPO model and they completely removed, 2 years of hard work to get, and to at least show the world that your company has some kind of usefulness. They also completely removed all responsibility from anyone creating these tokens. I mean, I'm telling you, this thing reads like an April Fool's joke. Like, it even starts out like this sentence made me laugh. Let's see here. Led by Coinbase veteran Olaf Carlson Wee. Coinbase veteran. Coinbase has been around for 10 freaking minutes in the world of technology, right? And I don't even think they're going to be around in a year. So who are you championing here? I mean, I joke around calling myself a 10-year Wall Street veteran, because working on Wall Street for 10 years is also like a drop in the bucket. You want to be there like 20, 25 years to be taken seriously. This guy is a Coinbase veteran. What has Coinbase done now that people are seeing them exactly for what it is? This thing gets bad. Like, look at this quote. This is the guy that's leading the charge. Tokens are very important. They directly monetize the open source founders and founding teams level. we've already seen many founders of blockchain networks get rich based on their creation. I mean, like, this is like a letter to the SEC saying, please arrest me, right? I mean, you have these founders getting rich on non-qualified investors buying these tokens, and then the founders immediately walk away without any proof that their project has worked at any point in time or will ever work again. This thing is just, it's like comedy gold here. Quote, take a position very early on in the project that I believe could truly become the infrastructure of the future internet, that could disrupt major centralized web services. That's what he says, but he knows he's just going to sell these things to the greater fool. None of this has proven. Like, Bitcoin is the only one that's actually doing something. I tweeted this out like a year ago. Basically, everyone saw that Ethereum can sell a token without any product, any platform, anything, and no I mean, I don't want to use the word regulation, but like not even a smart contract holding them to, you know, the promises of what they're promising with their platform. I understand that Ethereum managed to launch. It was a miracle that they launched. I've heard numerous stories that project almost fell apart multiple times. I don't know how true they are, but I personally didn't think Ethereum was going to launch. And they did, and the speculators made money, but now they think that that model is replicatable long term. And it's not. And all these ICOs, the ending of all of these ICOs is going to be way closer to the DAO project than they are to the Ethereum project and how they're going to end. And Ethereum is also going to end like the DAO project, and because of the DAO project, it's just going to take it a little longer. But these guys are basically saying that we will have a fund these companies. Now, OpenBazaar is an interesting case because Brian Hoffman is fighting any kind of ICO and tokenization. So the question becomes, how long can Brian Hoffman hold out, and will OpenBazaar ICO? Now, if OpenBazaar does ICO, we know exactly what this is all about. Brian Hoffman understands that ICOs are crazy, but if the VCs force him into that direction, this is, it's literally, it's a chance for VCs to exit, for the founders to, so that both VCs and the founders make money. Same way the VCs and founders make money now. The only difference is in the regulated IPO system. The only difference is in the current system, your IPO has to, the market has to see a product and actually use the product for something useful. Now, I understand they don't always get it right, and companies do IPO and then crash. And a lot of times it's because of the hype, and a lot of times because the product turned out to be no good. But in 99%, well, 99 now, in the .com days it was different, but percent of these cases, you have a product for the company to go IPO, and people want it, and they know this product. I know Fitbit went IPO, and their stock went nothing but down. Groupon went IPO, and their stock hasn't been doing well at all. Like, look, a lot of these companies did. Even Facebook IPO'd and lost 50% of its value, but then recovered. LinkedIn IPO'd, lost a bunch of value, and then recovered. But these companies that go IPO, you know what they are. They have a value. They have a product. And the founders are invested that they can't just cash out and leave. I mean, they could leave on the IPO, but the IPO brings them so much fame and limelight that they don't want to leave. They want to stay there a little bit longer and milk the popularity so they can then move on to another company. I mean, the ICO space has removed the concept of actually having your product something before you get rich and walk away. And this cannot last. This cannot last. It's ridiculous. And opening this fund, I think, is a terrible idea. Like I said, this entire article reads like an April Fool's joke.
I think OpenBazaar is a great example here, Tone. OpenBazaar, as it's currently funded and used, it uses actual Bitcoin. Bitcoin is the money. You send Bitcoin to your wallet, you spend it on open Bitcoin. Under the current model with the ICOs, OpenBazaar would issue OpenBazaar coin. It would have its own value, it would have its own blockchain, it would have its own proponents and developers and all of these complexities, and they would basically recreate the Bitcoin system for OpenBazaar. Not because it makes OpenBazaar easier or better software or some kind of features needed to escrow the funds or anything. They would do this because it allows them to print X amount of OpenBazaar coins and then sell them, and then to create a market, and then to get rich, presumably, like all these other token crowd sales have done. In each case, though, if we look back at the actual utilitarian value, you could just use Bitcoin. The whole point of this thing is that Bitcoin is there. It's a store of value. Don't recreate it, yet they keep recreating it.
No, I completely agree, and even worse, right? So here's what happens. Like, if token, I think Brian Hoffman will not tokenize, and I don't think that's coming. But assume
if they say get a second round, tokenize or no second round, you got to tokenize.
Let me ask you this question, right? So, OpenBazaar tokenizing, right? Are they removing the IPO part? Is the token simply going to be an investment in OpenBazaar? If the answer is yes, then isn't that a violation of SEC laws? If the answer is, well, no, the token is needed for the platform to run, which would kind of be bullshit because the platform is running without it at the moment, but let's say they pivot and they need a token to run the platform. So then what they're saying is, they're saying what Ethereum is saying, that the token, the mechanism by which you need to use OpenBazaar. So you are now using the OpenBazaar token to buy products on OpenBazaar. That's the only logical conclusion. So I keep trying to tell people, imagine if in 2000, you had to go and buy eBay stock in order to buy shit from eBay, paying other people in eBay stock. And then imagine you had to buy Amazon stock to buy things from Amazon. And then you had to go and buy Netflix stock to then use this Netflix stock to buy a movie on Netflix or pay for your subscription. Like, how this world? Or how about E-Trade, right? You have E-Trade. E-Trade allows you to buy other stocks. So what if E-Trade ICOs, right? So now you have to go and buy with a speculative value to then change this E-Trade token in order to buy other tokens like Amazon stock, in order to then tokens to buy products from Amazon. Like this is the system these people are advocating for. Like, I don't want, it's just mind-boggling how insane these ideas are. Their projects are so freaking silly, they can't get any money. So this is what they're doing. And there's plenty of, traders that are willing to just buy this shit up and down until the whole system comes crashing down. And then I'm telling you what's going to happen. It's going to be exactly like what happened in 2000 and 2008. When this whole system crashes down, all these people are going to run to the government begging them to do something, and they're going to come down on this heavy regulation on Bitcoin, or at least try to. So this shit ends.
Unfortunately, I don't think they'll ever be able to stop people from making altcoins. I think people are going to keep making altcoins, and they're going to keep ICOing them and selling them. We're going to have continuously. I'm afraid that the gift that Bitcoin is going to bring to the internet is infinite scams, and just more and more complicated scams. And for all of the good ideas and all of the other stuff, which may or may not happen as well, we're going to bring the scams. That's definitely coming. But let's move on to our final issue today, issue 5, which may or may also be a scam. Zcash price continues the downward spiral below $50. As we know, everyone was excited about the Zcash IPO. Everyone was going to make so much money because Zcash was obviously what we needed. It's anonymous currency, the greatest thing in the world. And everyone tried to buy it on the first day, and they were all going to be rich. But it didn't work out because the price has gone nowhere but down. And don't forget, CoinDesk is a subsidiary of Digital Currency Group, which has an ownership stake in the startup developing the open source Zcash platform. So while their previous articles were glowing and thrilled and exciting and how great Zcash was going to be, now reality has set in and the downward spiral is continuing. Tone, what do you think about Zcash and the current price?
All right, so I'm just going to talk about how, look, it was a terrible idea. And we go perpetually down because this on a podcast a while ago. Look, they hyped this thing up for years. When the demand was waiting at the door, like banging down the door, the Zcash, half a coin at a time. And now the inflation of Zcash, like Zcash, I think will probably double next month. It'll double again 2 months after that. It'll double again 4 months after that, right? Of Zcash is insanely high. The inflation of Zcash is insanely high right now. People say, well, Bitcoin had the same inflation in the early days. But they don't understand that when Bitcoin had this inflation, Bitcoin was worthless. Nobody was using it. This inflation as Bitcoin allowed Bitcoin to spread all around the world. Yes, guys like Roger Ver accumulated a bunch of it, right? And Trace Mayer was there, and Brock Pierce was there. Yes, there were a few guys and got a bunch of it useful at the time. It was virtually free at the time. And by the time the world found out about Bitcoin, 50% of it was already out there in the world. So when the demand came, there was enough supply. Also, the Bitcoin blockchain had 4 years of optimizing the supply-demand structure in order to fully accommodate the market. When the demand came, yes, I understand it went up from $10 to $1,000 in 1 year, and then fell from $1,000 to $100 the year after. So maybe this demand came just 1 year too early, because you can't control people. It's a free market, right? The 2013 demand came a little bit early. If the 2013 demand comes 1 year later, we probably only go up. We went up. We went up 100x that year, right? Up 10x instead of 100x, and then we only fall half that. No other cryptocurrency is capable of recreating dynamic supply and demand dynamic. Impossible. Because either you're hyping this thing up from the start, person, which is also dumb. There is a reason why Satoshi's invisible. He knew he'd be in jail by now or whatever, right? So you got to hype this thing up as a visible person. You're going to accommodate the demand.
The other key point to bring up
in the beginning. Go on.
I think the other point to bring up there, Tone, is remember early on, WikiLeaks wanted to use Bitcoin for donations. And Satoshi actually said no. He said, we're not ready for that yet. And not anything against WikiLeaks or anything political. He was just saying, as a network, as a protocol, we're not ready. So Satoshi and his collaborators worked on Bitcoin for years, testing Bitcoin. Whereas with Zcash, they certainly worked on it as much as they could. But like you say, when they opened the market, there were 0 Zcash in existence. They opened the market when they mined the first one. The very night of the mining was when Polynex and others added it to the exchanges. So it was virtually impossible to know what the price should be. And everyone who invested early I'm horrified for the results. There was, I think it was going for over a Bitcoin. It was going for well over several Bitcoins in the first hour, the first minutes. It was a crazy market, and now we've seen the sad result of that. It may have doomed a perfectly good academic project. This is, like many have said, another Bitcoin test net. It's another way to test some interesting features. People have said in the past, we certainly respect Zuko. He has a cryptographic background. He's well studied. But as far as the economic side, as far as the protecting the people who believe in you, do the people who believe in Zcash, after losing all their money, do they still believe in Zcash? And sadly, I don't think that they will. And I think that they're going to lose. Their interest in cryptography has led them down a financial ruin. And you have to look at your project and you say, where's your funds coming from? Who are we screwing over to get rich? And Zcash may have screwed over their fans here. Maybe not even intentionally, but the fans are taking the fall.
No, I agree with you. I don't know. And see, this is why people are like, oh, you're a Bitcoin maximalist. You don't believe in any of these projects. Just economically, from an economic perspective, I don't understand how any other project can possibly launch, right? I mean, Charlie Lee came close. I guess Jackson Palmer with Dogecoin came close, at least with popularity-wise. That coin never made it to $100 million market cap. Monero, I guess, did something, but then it was the dark markets that temporarily are riding them high. Dash continues to do something crazy, and they're just spending so much time on just, on the hype machine and news cycle, only because the creator of it pre-mined and he has all of it himself. Like, all of these things are like completely shady that, well, Monero isn't really shady, but again, I don't think Monero actually came the closest, right? Because Monero was around for like a year or two and it was kind of useless and no one really cared about it. And then there was a pump because of the darknet markets. Now, the day that happened, I had speculated with zero proof that I bet you a lot of those darknet markets bought up Monero, and that's how they made the money. And that seems to have been proven true when people took a look at the volume of Monero and all this stealth buying of Monero pre-announcement. So I don't think this pump is real. It was basically they wanted to make some money and they chose the one coin that they thought was most legitimate and served their purpose that they can do this with. But I don't think it's going to last for forever.
If you can't trust the darknet markets, who can you trust?
Oh, and then one of those markets like immediately shut down right after this and like took everybody's coins. I don't even know. See, I don't pay attention to the darknet markets all that much because I've never used them. I've never used Silk Road. Never been on Silk. I've never been on a single dark market, even out of curiosity.
Also, if you've been in Bitcoin for a little while, the darknet markets are always the same story, and the altcoins in the same way are often the same story. It goes up. It's really great for a while. It goes back down. And once you see this happen time and time again, and maybe you've even put some of your own funds in and lost some funds trying to catch the wave on these things, you get tired of it. And then they start labeling you as a Bitcoin maximalist. But really,
I know
we have to go back. Like, I'm a TCP/IP maximalist. I think we should make the internet the best we can, and the packets should be equal, and we'll keep improving it. And if that's not an idea that jives with you, maybe you don't like the internet. Maybe you're not interested in the history that we have of improving open source projects. And by taking things that they said couldn't be done, they said internet can't handle email, it can't handle attachments, streaming video, torrents, all of these things the internet was going to break. The internet kept not breaking. Bitcoin's the same thing. It's a general substrate for exchanging value, and it has issues that we're going to fix. And it has issues that we don't know about that we're going to fix. And it's going to keep happening like this. People are going to keep having new projects which are interesting. And unfortunately, they're going to try to make lots of money off them. And remember, for them to make money, there have to be winners and losers. And that if you're buying it late, if you're hearing about it late, you're the loser. You're the sucker whose money is going to be taken so that these people can be rich. So,
right. Again, in Bitcoin, there were winners and winners, right? But a winner, if you were a miner, is to hold on to those mined Bitcoins like another 6 months to a year. More investment you spent on the mining. Those that perpetually were using their mining rewards to upgrade their mining software probably never broke even. Happened if one of those investment was Butterfly Labs, then they went completely under, right? Like lost everything. So mining would have been profitable if you kind of did it right. I guess get lucky doing it right. So there could have been winners in space, but again, what Bitcoin did is not replicatable. I'm sorry, guys. I know you think that I'm like shitting on all these, but it's just not replicatable because it happened organically. Where else are you going to find a dozen developers willing to program for free for years, right? On something that may or may not work. People mining and knowing that they're losing money just for the sake of science. Your options right now are doing the Zcash thing, hyping it up, and then not able to provide the supply, or doing the Ethereum thing, hyping it up and able to provide the supply, but you're providing the supply by either selling something that does not yet exist, which to me is illegal, or of digital tokens. I mean, I guess if you building a new cooler or something and you put it up on Indiegogo, I think there is still some kind of rules there or something. I actually like the guy that put an Indiegogo for fun. Anybody want to donate money? I'm looking to get $10 to make a new potato salad. He ended up with $40,000 in Indiegogo donations. So I don't understand like what the responsibility is there from that guy. But we're not talking on a scale of millions of dollars, right? So like I said, the other option is to do the Ethereum route and to sell digital tokens that don't exist, or to sell tokens that exist that you pre-mined to the tune of 60 million tokens, right? Selling them for like 50 cents each or whatever, right? So if Zcash was to have the proper liquidity and to accommodate the demand, when it's banging at the door upon launch, they would have had to pre-mine those coins. And now the question becomes, where is that money going, right? And this is why Bitcoin is not replicatable. It just happened organically, and we all got lucky. And you should be happy that it exists and utilize Bitcoin with its properties to the best of its abilities. But trying to recreate it is like, I don't know, it's like trying to put model or something way more complicated than that. It's not going to work. It's just economically it's not, unless you're willing to give me like literally a team of a dozen passionate developers that want to work on something worthless that suddenly becomes just by luck.
Well, and we've been mainly talking about the launch of Zcash here. We haven't even talked about one of its most controversial features, which is the founder's reward. In every block of Zcash mined, a certain percentage of it is reserved for the developers as an ongoing payment for the developers. But again, we don't know the price of Zcash, so we don't know if this 10% is going to be a great deal of money or a small amount of money. And how long are we going to pay them this? I'm just saying 10%, but how much are we going to pay them this percentage indefinitely, forever, and not judged on the quality of their contributions at all? I've heard it's hard-coded. The addresses are hard-coded in there. They're going to be continuously rewarded. So that was a pretty shocking thing as well. Tone, what did you think of that as opposed to pre-mining or insta-mining or whatever other ways that the developers have been rewarding themselves with these tokens?
I don't know. It's rare that I say this. I don't know. Look, I don't know if that 20% mining reward, 20% for the first 4 years, right? I mean, look, to me, the 20% mining reward for the first 4 years is a way to avoid them paying themselves with a pre-mine. It's the same thing, right? Almost the same thing, right? So the coin has to still exist and keep mining. but then again, you know, like they can run their own miners, right? I mean, if the coin is worth something, or they don't even have to, like someone else is mining for them and they're getting paid, right? But they're avoiding pre-mining it so that they don't get a bunch of shit from people like us that they pre-mine the coin. They also probably can get away from the regulators saying that, well, it was, you know, free market and they mined it and this was part of the contract. We didn't force them to mine it. It was their choice, but they were going to pay us this fee. Is it right? I don't know, but to me, that part, like, I know some people are picking on the 20% for the first 4 years, them paying themselves. And other people are picking on the potting ceremony, right? That created this random seed that kind of started it all. And if the potting ceremony, if Zcash succeeds in 20 years, there's a small probability that those people could have colluded and it's all over, right? Things are not why I consider Zcash bad. Some people think those are the worst two things. I don't. For me, it's everything I have just explained. It's, I mean, you have to understand that the economics of Bitcoin is not replicatable. Understand that. So if you understand it, purpose just to get rich because you know your coin will not succeed, right? If you're going to do it as a because you like the science, then you need to stand up there and champion for people not to buy your coin and convince these exchanges not to list your coin, and you threaten them that you will reset your chain. List your coin of all of this, right? I mean, that's how I would have done it if I cared about science. Because remember, Bitcoin's life, there was no exchange. There was not even a Mt. Gox, right? I think Mt. Gox came in, what, early 2010 at the earliest, I guess, right? It was definitely before Bitcoin it was definitely after Bitcoin had a price. And so there was no exchange. There wasn't this speculative mentality back then. So if you're going to tell me that you're creating a science project, it better be like while all of this, while people are wasting their time and energy and effort accumulating these coins, it cannot have any value. So the only way to do something like this is to literally threaten, like you say, I will hold on to that private seed, but then again, no one's going to trust it, right? This is what I mean. Like you end up in a chicken and egg situation. How do you prevent the market from speculating on the price of your coin for years while it spreads around the world, without it having a speculative value? Bitcoin did it. It did it. How the hell are you going to replicate that? You can't. I mean, I can think of a few ways, but I don't even know if they would work. And there's a high likelihood that you will have to reset your project after a year of hard work and start all over again so that they can spread around the world again for free.
I agree on the Bitcoin usage problem. When I first looked at Bitcoin, I thought it was really interesting, but I thought no one would ever use it. I didn't see a path from a little computer science project to this huge international currency, which even though we're very small, we're still a huge international currency compared to what it started out as a little computer science project. What I'm concerned about the founder reward is I just don't know how much they've cut themselves in for. And I don't think they do either. When Bitcoin started out, it was a few dollars. There was never this kind of idea that Bitcoin would be incredibly valuable per coin. With Zcash, it's the same thing. We really don't know the value of the coin, so we don't know the value of the founder's reward. So unlike a pre-mine where they'd have 10,000 shares or whatever, they have 10% ongoing, or 20%, as you say, and it's really hard to determine the value of that. So I don't know if they've overpaid themselves or if they've underpaid themselves. No, it's a new way to pay themselves, certainly. I don't know the results of it.
And besides that, right, like again, right, they have the exact same inflation rate as Bitcoin. Okay, fine. They want to be Bitcoin. Take a look at Bitcoin. You take Bitcoin in January of 2011, right? 2 years after Genesis block. In January of 2011, with already an exchange like Mt. Gox, right? The price of Bitcoin was about 50 cents. Don't quote me on it. I'm talking from memory. I wasn't even a Bitcoiner until 2013, right? So the Bitcoin in early 2011 was probably around 50 cents, because in June of 2011, it went from $1 to $30 thanks to a combination of Chuck Schumer teaching everyone how to use Silk Road and WikiLeaks accepting it as donations. Those two things happened 1 week apart from each other in June or July. I don't remember the exact dates off the top of my head, right? So in January, the most Bitcoin could have been is 50 cents, okay? That's 2 years after Genesis block. Bitcoin was 50 cents. And so not 50%, so about 25% of all Bitcoins were already in existence. And I would say a good 5% of all Bitcoins were already lost permanently, right? They were not in circulation, because in the early days, people were sending each other thousands of Bitcoins and just losing them. I've heard of these stories. So how do you replicate that? And if you assume and at that time, Bitcoin already had use cases. It was already being used in the darknet markets, and people were already talking about it, using it for WikiLeaks. Zcash has a use case. It doesn't have a use case, right? So if Zcash doesn't have a use case in 2 years, where people are actively using Zcash in 2 years, people aren't losing their Zcash right now the way they were losing Bitcoin in the early days, right? So we get to 2 years from now, Zcash be lower than 50 cents? Just logic would suggest that. Dominant cryptocurrencies as a use case, which again, I don't see happening. So this perpetual fall, I just don't see economically what can possibly stop it at a current rate of creation of Zcash and inflation. Plus, the founders are going to want to sell. They're not going to sit on this thing watching it. The 20% founder rewards, they're not going to sit on it and watch it go down to $1. They're going to start selling this damn thing.
It'll probably be just like Steam, where as soon as they get the coin, they sell the coin. They get the coin, they sell the coin. So it has a potential downward pressure continuing.
Yeah, but since Steam is not actually a blockchain and they can do whatever changes they like at any time, that's why Steam is constantly changing what the hell Steam is. So Steam can come out tomorrow and say, hey, we made an adjustment to our inflation. We made an adjustment to the way Steam is. Like no one checks this stuff. It's like when I talk about Steam, I'm like, where's your content? And then someone replied to me on Reddit, oh, the content is on the blockchain. Go check the blockchain. Complete insanity.
There's allegedly some kind of blockchain, like a back-end database that you could connect to, but I don't know that it's mined and stuff. But let's not open that one up now. I think we're headed towards the end of the show. Tone, do you have a story of the week or a prediction for us?
Oh man, so no, all my stories were used as topics today. Trying to think what else really happened this week. I honestly don't, like, between the podcast we just had before this and this one. I don't really think anything else is going on in Bitcoin. I mean, I like the price right now. It's being stable at 270. I guess my story of the week is myself. Let me. I've been. Oh, can I pull this up? My story of the week. Hold on. Is this it, or is the other one? Hold on. I'm gonna open them both up, and then I'm gonna share my screen. So I was interviewed by the Bitcoinist today. Let me share my screen. It's actually not the interesting picture. So I went to I went to our BTC for the first time. Because look, guys, I don't use Reddit. Like, I know people, I've never had a Reddit account. I don't use Reddit. I've never had a Bitcoin Talk account. I just don't use those channels. I can barely keep up with Twitter. So I just don't. But I went to RBTC for the first time because my article was posted up there. And this was an interesting comment. Sorry, Thomas, people are considering the show the Tone Vase show, which is not my doing. I love the Vin Diesel comparison. That was great. So RBTC is calling me the Diesel of nerds, which is great.
But I'm just not seeing that without the shaved head. Vin Diesel for me is a shaved head guy.
I am very close to having a naturally shaved head. I'm getting there. I also need to gain about, I don't know, 100 pounds of muscle. But yeah, so people are accusing me of being the Blockstream shill, which is somewhat understandable, but the conspiracies over there run deep. When I do occasionally talk on the internet with like members of Blockstream, I only later find out that they are on the Blockstream team. So I don't even know who's fully on that team. So yeah, so you can stay with your rumors that Blockstream is somehow paying me, but they do not. I am not in regular contact with them at all. When I'm in San Francisco, I like stopping by their office, which I have only done one time. And I occasionally see the Blockstream members at conferences. That's pretty much my only interaction with them. But yes, I like the work that they are doing. But the comments on our BTC are great. They did not disappoint. They love me over there. Also, the comments on our Ethereum were great to my article. So if you haven't seen it, go ahead and Google it. That's not really the name of the article. I think it's just called Interview with Tone Vase on Bitcoinist. Let me see if I have it up on my, here it is.
Very cool. And people can also subscribe to Tone's new podcast, doing weekly charts and stuff on the Tone Vase channel. So everyone check that out, probably off your Twitter, something like that.
Yeah, off my Twitter. I mean, it's just on YouTube. It's just my YouTube channel. You can Google it under Tone Vase. Shouldn't be too hard to find. But yeah, this is the article. I guess they did name it. If SegWit doesn't pass, it's likely nothing else will either. Yeah, so I strongly encourage people to go ahead and read it, and feel free to provide your opinion on Reddit or even on Discuss. You will not hear back from me because I do not have those accounts. I try to have as few accounts as possible. I do reply on YouTube, and I tend to reply on Twitter. So that's pretty much my story of the week. Oh yeah, there were commenters here I cannot reply to, basically calling me an idiot and stuff, which is fine. We do have free speech. It's okay. I don't know why it's taking so long to load. But people have to understand that a blockchain, the Bitcoin blockchain, is not a free resource. You don't have endless energy. It's not free. Keep that in mind when you are criticizing it. Oh, it was the whole decentralization thing. Right. People think that decentralization is efficient. It's not. The Bitcoin is very inefficient, and it needs to be that way. If you think efficiency is brought about by decentralization, insane. Lots of good things come from decentralization. Efficiency and making things faster and easier is usually not one of them. Okay, so just again keep that in mind. I can't reply to people's comments because I don't have a Discuss account. I just don't like all my comments being tracked in one place for someone to just easily read all my comments. And Discuss wants to know your email and stuff like that. And I try to sign up for as little things as possible.
All right, good stuff, Tone. And I didn't really prepare a story this week, so I just wanted to say thank you to the San Francisco Bitcoin meetup. We had our Christmas party last night. It was great. Waxman PR was there, Keep Key, BitGive, gave a speech about their new donations tracking software. It's interesting stuff. Check that out at bitgivefoundation.org. We're also joined by KeepKey, Lisk. I'm trying to think of the other one. Oh, CoinSource ATMs. And just thanks to everybody for sponsoring the San Francisco Bitcoin meetup and for coming to our meetups. We have a free beer and pizza. Most of the meetups, we have some speakers, and it's just a really nice time. It was good to see everybody last night. So that's about it for today's show. Tone, do you have anything else to add?
No, that's it. Oh, wow. I think this podcast was so much longer. You think it's two of us, it would go 1, 2, 3, but then I go off on a tangent. My bad, guys. I really try to keep these things short. I always try to do the same thing on my analysis. I try to keep them to 20 minutes, and they're always 45. So it's
we just got to set a timer next time and click you off when it buzzes. But we're running out of time. I've got to go to dinner. Until next time, bye-bye.